Good Monday morning, everybody. I'm Zev Fema with TheStreet.com, here with Jim Cramer, live at the floor of the New York Stock Exchange. Jim, it's kind of a crazy day. Tough day. What do you think?
And you know what? It should be a tough day because we're in a moment where we have a strong economy
Right.
On some areas, and retail's moving up. And then we have a weak economy on others, which is related to overseas. Jay Powell doesn't care about overseas at all. He cares about the U.S. He's looking at our numbers. He doesn't seem to understand that commodities are rolling over. So we have kind of the worst of all worlds right now. We know that he wants to tighten, and every time he tightens, the only thing that goes up is Clorox, Procter. Procter's down today. I think that's shocking. I think it'll keep going higher. And everything else goes down. The banks go down because people are worried about loan growth. The internationals go down because we have no resolution with China. So you just have anything housing is bad because
Right.
mortgage rates go up. I mean, I was with a housing lawyer last night, and we were all talking about how prices have peaked
Right.
everywhere, all across the country. And yet the Fed persists because the Fed wants to have some slower than expected employment numbers.
Mm-hmm.
And my writing colleague, Matt Horwian, and I are aghast at this. We're aghast because is it really that he wants to slow down the economy to the point where workers can't get a 3% wage hike?
Right.
Now, is it hard? I mean, my wife is working at our new restaurant, the Longshoreman, and
Right.
we're struggling. We're struggling to find workers. But you know what? Some of this stuff has to do with less immigration. And some of it has to do with the fact that it took people by surprise how quickly the economy got better. What will take them by surprise is how quickly the economy can get worse.
Right. And so you do mention these kind of cross currents in the economy, the strong jobs market, the wage inflation,
Yeah.
but at the same time, the issues with the housing. And keep in mind, the connection we're making there is with the Fed raising rates, the 10 years of benchmark for mortgages, that's causing the houses to be more expensive than just their list price. So
Well, I mean, this is what's really important. People don't understand. Everybody who refinanced, I'll give you an example. I have a 2.58 mortgage, okay?
Right.
Now, a 2.58 mortgage, I can get 3% on a CD,
Right.
so I'll buy a CD, and that funds my mortgage.
Right.
But the people who want to move up and have that lower mortgage, they now get the high mortgage rate.
which is about 5%,
Yes,
something like
5.
that?
So if they had a 3.5 or a 4, they buy a new house, which is coming down in value. They pay a 5% mortgage. In many places in the country, they don't get the state and local tax deduction anymore.
Right.
It makes it so you're going to have a huge surfeit of houses, and it's the Powell's tone deaf. He's tone deaf. He's focused on the Longshoreman, my restaurant.
Right,
He says,
right.
He figures if he cracks the economy, my wife will be able to hire a general manager
Right.
and won't have to work every night till 11. She worked last night till 11 cleaning the bar. Why? Well, because there are not a lot of general managers.
Right.
Why are there not a lot of general managers? Because there's not enough restaurants closing. Powell wants more restaurants to close. I mean, that's kind of the micro of what's happening.
So
He wants retail to have more layoffs. I don't know.
Right. Do you think he's focused too much on these smaller purchases, not enough on the big purchases, which, as you always say, we discussed this on Friday, housing punches above its weight? Is that?
I mean, he doesn't seem to care. See, what I think people want to hear is, I'm sensitive to housing really rolling over. And I'm sensitive to the idea that inflation has come down because of oil. So what I have to do is I have to raise once again. But now I really should wait and see to find out whether those issues can make it so that the economy can slow without me.
Right.
See, he needs to say, you know what, we're on the right path. We're not declaring victory, but we're on the right path. And what you're getting with the stock market, whether it be Apple, which overseas emerging markets not good, or whether it be Home Depot, which is
Strong dollar there, remember?
yeah, what you end up is, whether it be GE, where we just talked about extensively,
Right.
what you end up is no reason to buy. Buyer strike. Buyer strike, you get down 500.
And so I'm
not a problem.
Yeah, and I'm glad you mentioned Home Depot. That is the stock of the day. Again, real
We're
money.
doing some
Kevin
good stuff
Curran,
with
definitely get over there. And I know you guys were talking this morning with in regards to Home Depot. There is the strong market, an early Thanksgiving, giving a lot of lead time before Christmas, the longest since 2012. Rising wages, strong U.S. dollar. But again, there is this housing issue. And on top of that, analysts.
Look, let's give an example. TJX, okay?
Right.
TJX is good. TJX is going to be remarkable here because there's lots of inventory in the system, and because home goods is the inexpensive way to decorate your place for Thanksgiving, and that is what's going to work. just in the same way that Dollar General's working. So Ross Stores is working. Burlington is working.
Right.
Hey, one of our stocks that we've been trying to buy for the Action Alerts portfolio is Five Below. That's working.
Right.
So, I mean, we're really struggling to accept the fact that it's a Verizon market, and everyone's piling into Verizon. It's so expensive, but nobody cares.
Right, that's 60. And remember, when we talk about being a lot of inventory in the system, and there's too much inventory, these off-price retailers, TJX, Ross Stores, Burlington, they're the beneficiary. They get the the last
all that
season
Sears.
clothing.
I mean, Ollie's working. I pulled up with Ollie's CEO the other day. It's great. It's great. So the problem is those are the anti-stocks. I mean, maybe I'll write about this tonight. When you see certain retailers up, it's really bad. And when you see certain international stocks going down, it's really bad. And when you see FANG getting crushed, it's terrible.
Right. All right, Jim, so tonight you have a very special Veterans Day Mad Money. First off, just really quick, from TheStreet.com, thank you to all of the veterans. Really, we appreciate it. The reason we're here today able to do this.
I mean, my father always said something. Now, my father volunteered in World War II right after December 8th. But he always said, what a remarkable group of young people who volunteer to go to places like Afghanistan and Iraq just as a source of love for our country. Because those are this is not the Japanese attacking us. Now, 9/11 happened, but Iraq did not do 9/11. And for people who are serving, I really got to say thank you, because it is thankless. Right. And our politicians let you down, not unlike Vietnam. What did our politicians do? They had no real plan. But you had a plan, and that was to help each other. And that plan transcended anything our country could do. Shame on our politicians, though. They had no plan.
All right, so again, thank you. Be sure to catch tonight's Mad Money. And Jim,
you deserve better from our politicians.
And you've actually got two companies that have pretty interesting ties to veterans and stuff. You got FireEye, CEO Kevin Mandia.
I completely, I completely think that, correctly, like FireEye, who knows how to do cyber terrorism and defeat it better than the U.S. Army? Well, arguably maybe the Israeli Army. That's CyberArk. But you need people who are loyal, because you cannot have them defect to the other side. And that's FireEye. The other one, I mean, a company like J.P. Morgan that's made a commitment to hire vets is Starbucks. So we're going to have Kevin Johnson on. And by the way, if Howard Schultz run for president, remember, he has General Gates on his board. He has done a lot to help veterans. I think that Howard Schultz might, I'm not going to say who's be a good president or not, because I'm not political. But understand that Kevin Johnson has engineered a change, really a radical change, which is how a stock could go to 52 to 68 instantly. A lot of portfolio managers really want to be in Starbucks. I think the moment to buy Starbucks is past until a pullback.
Right. And remember that commitment we're talking about with Starbucks: 25,000 veterans hired by 2025. So
It'll be more than that.
Tonight.
It'll end up being more than that.
I think so.
You know, I remember my father saying, "Look, I want to hire veterans." My father's company was too small to hire anybody. But at that point, what he was saying was, it's actually interesting what he was saying. It's like, wow, anybody would hire the veterans. These are tough men and women. Oh, yeah. And you need to have special jobs for people with special skills, not lifting boxes, which is what my dad did. I hope that Starbucks is taking these people at a high level. Right. They deserve it, because they can handle any amount of pressure. And each store has a lot of pressure. That's what you want. It's about and that's what we're going to talk about, is the pressure. The pressure of business is often nothing to a soldier. Even as to someone who's not trained, it's something. Right. So we're going to talk about that.
And Jim, just real quick before I let you go, Bob from Kentucky wants to know, for a retired investor.
He's from Kentucky, he must be lucky.
Yeah, so he wants to know, for a retired investor, how do you view the stock of Ford, for dividend income?
Well, I never like to reach for dividend because if there's any sort of chance that it might not work, it would be, of course, hazardous. But that last quarter was good. Yeah. I feel very inclined to think that dividend is good. Again, I would prefer, and we're going to do a show about dividends, how to spot a dividend that's not safe. You are reaching for dividend. I would prefer American Election Power.
All right, there you guys have it. Be sure to get over to Real Money, Home Depot stock of the day.
Yeah, our stock of the day, I've got to tell you, is blanket coverage on a stock that I'm sure you care about. Okay,
right, absolutely.
I select them with a terrific guy in London. and I do it every morning between 4:30 and 6, and then we just drill down. We are the only place you want to watch for Home Depot, and I know a lot of you care because you're trying to figure out whether Home Depot's a housing stock or is it a retail.
Oh yeah, I just left. Kevin's hard at work on it.
Yes.
And also Wednesday we'll be hosting our Action Alerts members call. I'm going to keep saying it until then.
We're working on a lot of cool stuff. How to analyze bullpen stock.
Right.
Of course, we'll have a little top about the economy. I'm promise you it's going to be 40 minutes because I know when we had that unbelievable Chaikin. Are you still good, by the way? Unbelievable Chaikin seminar, webinar. We saw how long you wanted it, and we're not going to kill you. We're going to allow you to work.
40 minutes seems
We're going to allow you to do your job.
So be sure to check us out 11:30 on Wednesday. We're talking how we screen a stock, what we look for, all those stuff.
Right, and I want to emphasize, like when we created the club, man, listen, my goal was to do something that no one else has done. The club, the call that we do is a lot like what the call is with big-time portfolio managers, of which I was one. And I think you have to understand, the window that is open to those who have your money, who are not index funds, and you know I favor index funds for your first part, I think is priceless to people. And there should be hundreds of thousands of people on this call because of how hard we work on it.
All right, absolutely. Yeah. All right, guys, there you have it. I'm Zev Fema. Jim, thank you so much.
Thank you.